Hello, everyone, and welcome to another edition of the Technical Market Update. It is Friday, the last trading day of the week. I hope you all enjoyed the week, and we had an interesting couple of days after the British election. This is a chart of the daily chart of the British Pound USD, and we see that the market spiked yesterday on the news of the exit polls that the Conservatives looked like they were winning or going to win the election. This is the 15-minute chart. You saw there was a definite spike in the pound, and that translated across the major British pound pairs, namely the Australian dollar and the Japanese yen. We got a huge spike upwards. Now, what are we seeing for the pound after the non-farm payroll report, which the market is still absorbing that report? Let's see. The report came out at 8:30 Eastern time. The market has been a bit volatile since then, but the movements haven't been that great in the British pound. So what can we see for the British pound going forward? There is considerable resistance, and I'll just put a line here. Consider resistance near this 156 level. This is where the market has to close above for the bulls to gain more confidence with the pound. And what we would like to see is a close on the daily chart above this level for the bulls to be more confident. So just because you may get a spike up on the candle, that does not mean the market has closed. When we say a close, we mean the candlestick closes above the resistance area. That will then reduce the chance that it could be a false break in the pound. So that's where resistance is. The actual price is 155.52, and support is at this swing low here. Swing low, as you can see, that swing low, and the actual price is 150.91. So I will say, whichever way this market breaks out of this these support and resistance areas, that's where we will see clues as to where the long-term or the longer-term trend is heading in the pound. Okay, looking at the euro, the market is down on the non-farm payroll report so far, but the market is finding support at the daily S1, as you can see, and anything can happen in the non-farm payroll report. So later in the day, you could see this market rally, or you can see it continue to fall. It's any way it can go with the non-farm payroll report. Resistance in the euro is at 114, and at these previous highs in the 115.33 level, and support is down below the swing high at 110.65. That's where we have support. Okay, let me point out update this British pound Australian dollar. This is the triangle. What happened to the market on Wednesday? The market closed below the triangle, found support at the channel bottom, and rebounded. This was the this was the day of the British election results, and the market spiked late in the session. Market rallied right up to previous resistance near this 196.20 level right here, and the market declined from there. So let's look on the 4-hour chart of this. We see that the market declined out of this 196.50 area and is currently finding support at this triangle breakout point. So If we're able to find support here, we could see the market rally from here. But this 196.50 level is massive resistance in this market. Good support is at the 190. This 190 level, it's strong support. And if we take away the triangle, let me just take it away here. We see that we could also be in a channeling situation, and the channel boundaries are clearly demarked here. Actually, this may be a clearer picture for this pair. Another British pound pair, British pound, Japanese yen. We see the market trend line A, B, C. The market broke this trend line, came down, tested the trend line, and rallied from that trend line. Now, resistance in this market is currently at 185.01, and we want to see the market close above this 185 level. So if this remains at this doji pattern, we want to see the market close above the doji for the bulls. And for the bears, support is down at the base of the triangle, or the breakout point, which is 181.42. Okay, so this, for our portfolio, we are currently long the British pound, Japanese yen, and also long the British pound, Australian dollar. And we have been saying this for a number of days now. And these are position trades that we are taking. And if the market does go our way, we will lock in some profits shortly. If it goes against us, we'll take a small loss and move on to the rest. Move on to another trade. And that's just how you have to approach the markets. Okay, taking a look at the Canadian dollar, we see that the market, it broke down from this 124 level, but the market is still indecisive, and support is at this 120. The exact price is 1944. If we see a close below 119.44, that could signal further losses in this market here. So that's definitely something to look out for. Looking at Australian dollar market, still below critical resistance at 80.75, but still above support at 78.02. So next week we should see clues as to where these trends are heading in all the major currency pairs. They seem to be trading in tandem. So as today is Friday, so on Monday when the market reopens, we will definitely see if these support and resistance areas are going to hold and give us further clues as to longer term trend in the market. Okay, so this is Beyond. I hope you have a wonderful weekend. Do what you like to do. If you have to work, well, just do the work, and hopefully someday you will have the time to take off the entire weekend. And that's a good thing about trading the markets. If you have money working for you in the markets, you can have greater downtime than regular folks. And if you want these trade signals sent to your account, what you can do is click on the link below this video and get started. Remember, the markets are offering some wonderful opportunities now, and really, if you don't act, the market will leave you behind. Okay, thank you very much for listening, and have a wonderful weekend. Bye.